When was the last time you felt inspired? Are you ready to take your passions to make a difference while living a life you truly love? Your host, Katana Abbott, who is a life and legacy wealth coach and certified financial planner, searches the world to bring you experts in the field of personal and professional growth, wealth creation, and mind, body, and spirit. So grab a cup of coffee and take that quantum leap you've been waiting for. Smart Women Talk Radio, the link to live with purpose, passion, and prosperity.
Hello, everyone. This is Katana Abbott, and I want to welcome you to Smart Women Talk, where I search the world for smart women and a few good men. And this includes best-selling authors, thought leaders, and change agents who are on that leading edge. So we talk about things like money, business, health, inspiration, and the metaphysical. I'm really excited about today's interview because I've been watching this gal for a long, long time. We seem to have similar paths, and I'm just so excited that she's doing what she's doing now. And her name is Linda Jones, and she is the CEO of Be Wealthy and Smart. We're going to be talking today about how to create financial freedom. In fact, our whole theme this month is about financial freedom. And if you join our list, you just go to joinsmartwomen.com and you'll be taken to our homepage. You can get on our list and you'll receive our newsletter. It's theme-based, and we always highlight two guests. They quite often they'll give us a great article, maybe a free gift, a tip. So get on the list if you want to know who's coming up. And you'll also get invited to all kinds of great events and get some great gifts, and just make sure you don't miss out on anything. So anyway, Linda and I are going to be talking about this whole thing of this tech revolution that's underway, how to shave off decades of investing time, and also this thing, cryptocurrency. We're going to talk about how to get invested in it. So let me tell you a little bit about Linda. She's been sharing her wealth building secrets and tips and knowledge that have made her $2 million by the time she was 39 years old. And she teaches financial freedom about how to make the right choices and how to invest well. And she really does believe that anyone can become wealthy, no matter how much or how little they are starting with. And that's just really great news. Her first book, You're Already a Wealth Heiress. Now Think and Act Like One, 6 Practical Steps to Make It a Reality Now, is on the list of all-time best wealth books by Book Authority. And her award-winning podcast, which I know you'll love, you'll want to sign up for this, Be Wealthy and Smart, is listened to in over 130 countries. And she has now over 7 million downloads. She's been doing this for quite a while too. It's pretty exciting. So Linda, welcome to Smart Women Talk. I've been wanting to get you on this show for a long time, and I think it's the perfect time for what we're going through in the economy, where technology is, and this whole thing with cryptocurrencies that we're going to be talking about. So before we get started, I really would love you to tell our audience a little bit about how you ended up doing this. Like, where did you come from? Was this something you have always wanted to do? How did you get started?
Well, I'll try and make it a short version, but I was born in Seattle, Washington. And when I was young, I was about 10 years old, my dad gave me the book, Think and Grow Rich, which got me on the path of mindset and money and the power of your mind in building wealth. And from there, I wanted to get the real tools and understand everything about wealth building, from investing to taxation to just everything. I just had a thirst for financial knowledge. So I got my business degree at the University of Washington. I went to work for a stock brokerage firm in Seattle. And from there, I was promoted to San Francisco and New York City, actually worked on Wall Street, worked in the World Trade Center, and had that excitement in my early life. And then, was in the business for a long time, got married, and we were married, we were together about 8.5 years. And one night my husband died unexpectedly of a brain aneurysm, which completely, of course, changed my life. And I realized that I had enough money. I didn't need to work anymore. I would retire from my corporate life and pursue what I really felt was the reason I was here? What was my purpose? And I really went in search of my purpose. And I determined that my purpose was to teach other people about wealth building and make it very simple, speak about it in plain English. It was very understandable, but yet give high level information. So it wasn't dumbed down for people. It was just in plain English, but giving really high level investment experience, for example, talking about cycles, also bringing in the mental side, the mindset side, and 6 steps to wealth that made it easy for anyone to understand the wealth building process so that they could have financial freedom.
Yeah, and I remember you started talking about things like investing in gold, in metals, alternative things, and you have been a big proponent of educating people, especially women, which I love because we're smart women's empowerment, but educating women about this idea of cycles and bubbles. Did you want to just mention that? Because, we've been in this big bull market for so many years, and a lot of people are afraid it's going to end. Is this one of these bubbles we're in, or is this still a good time to be investing?
Well, I happen to think this is one of the best times to invest in our entire lifetimes. And that's because I see this as a technological revolution that we're entering. I call it the quantum age. It is similar to when the internet was introduced. We didn't really know it was coming. We weren't prepared for it. We didn't understand what it was and how it was going to change our lives. It took us several years to really integrate that into business and incorporate it in our lives. But we all know now how important the internet is. And the problem is that the internet was built for communications. It wasn't built for payments. So we don't really still have a very good payment system within the internet. So all this rise of cryptocurrency, all of what we're seeing with non-fungible tokens, which are unique works of art or unique contracts or unique music, those things are all now coming into being because we're coming into a time that's the internet of value. So this is going to be all about payments and value, tokenizing the value of everything. For example, tokenizing real estate so that multiple different people could invest in a property. There's going to be a lot of change coming in the next few years, but this revolution is causing a ton of change from centralization, where we had governments that were printing a lot of money, which is one of the reasons I've recommended people buy silver, not quite really gold, but silver as an investment, and cryptocurrencies for a small portion of their portfolio, but also stocks. But it's because centralized governments have been in control of money for a long time. And now it's becoming decentralized. So that means we're not going to have people in charge anymore that can control the money printing and the creation of money. It's going to be the people who decide what their money is going to be. And that's where some of these cryptocurrencies are rising, is because the people are choosing what they want their money to be.
I want to share something with you. I was in Brazil at a conference, a retreat, and the one night they said, we're going to be talking about how to make money, how to make money. I forget if it was in Asia or something like that. I don't know, but it was something about making money. And I thought, well, this is kind of strange because it's so off topic. And they had a gentleman there, and it really was about making money because he was a designer in Hong Kong. He was from New York, but he was a designer in Hong Kong. He was actually designing the money for one of the banks. And he said in Hong Kong, they actually had, the banks can print their own currency. They had, 2 main banks, I guess. And so they had competing currencies, and it was all about who made the most beautiful currency. People might want to use that one. And there was all these rules, and it was the most interesting thing. And that was the first time I ever heard of this idea of having, competing currencies. And it just came to my mind when you brought this up. So you're saying that we're going to have the option to use whatever currency we want.
Well, it may turn out to be that way, but we certainly will have a variety of currencies and forms of value that we can use. I mean, a lot of people have heard of Bitcoin, and while it was the first cryptocurrency and Ethereum was the second cryptocurrency, those technologies have actually been surpassed. And the sad thing is that all you hear about is Bitcoin on the news, and they tend to say it's in a bubble, it's this, it's that, and they give you, sort of this sense that there's a ridiculousness about it. But the reality is that there are technologies that are now in play that are creating purposeful reasons for new currencies. So, for example, in the banking system, $27 trillion of money is tied up, cannot be used, because it has to be there in case people want to make exchanges of foreign currency. So if you want to go from dollars to yen, or you want to go from euros to, something else, they have to keep $27 trillion that cannot be used. And so it's just a terrible waste of resources to have this money all tied up for foreign exchange. Well, there's a new technology that allows a bridge currency. So you could immediately go from, dollars to euro in under a second at a cost of less than a penny. And it is a green energy. So there's, this kind of new technology that's coming into being, and it's already far surpassed Bitcoin, which is not a green energy, which is very slow and has very high fees. But the current banking system is also very slow and has very high fees. So to have something that's almost instantaneous, that's very low cost, that the banks can use and would free up $27 trillion in capital is an astounding accomplishment. And that's just one example of a future cryptocurrency that I think is going to be destined for great things.
Oh, that's exciting. So, we saw how Bitcoin dropped so much, and now it's back up. That was a buying opportunity, wasn't it? It's
always a buying opportunity when you have something that is a long-term increasing asset and it's volatile and you can pick it up cheaper, whether that's a stock, whether that's silver, whether that's Bitcoin. That's always the case. And the thing about cryptocurrencies is they are very volatile on the downside, but they're also very volatile on the upside. And that's one thing that I'm currently writing about in my second book, is the fact that the compounding rates that we are seeing over the long term for cryptocurrencies are higher than stocks. They're higher than real estate. They're higher than any asset we've seen in our lifetime. So you use Bitcoin as an example. Bitcoin has compounded at an annual rate of 200% a year consistently. And that kind of return we haven't really seen in another asset class. The thing is, that's not even the best of the best. There are cryptocurrencies that are compounding at even higher rates than that, which sounds crazy to us because we're not used to such high compounding rates. So people just jump to the conclusion, oh, we must be in a bubble. This must be something fake or false or something wrong with it. But the reality is, this is more akin to being a venture capitalist. So most people aren't able to invest in venture capital deals because venture capitalists have to be accredited investors. They have to already have $1 million in investable wealth, money outside of their home. And they have to make $200,000 a year if they're an individual, or $300,000 a year for a couple to become an accredited investor. So most people aren't able to invest in young businesses. Young businesses can grow at thousands of percent per year. And the average, though, for venture capital is 25% per year over the long term. So most people don't realize these higher places of compounding, and they haven't seen it in their lifetime because it's been more in the young business phase. But when we look at like the Inc. 500 fastest growing list of companies, we see that they can grow in the thousands of percent per year. And that's really what you're investing in with cryptocurrencies. They're young technology businesses in a technological revolution that we're in.
So say that again. When you said the Inc. 500, repeat what you just said. What is that, an index? For listeners, what are we referring back to?
So Inc. magazine, INC magazine, does a list of the 5,000 fastest growing companies, and they put it out each year. And what they do is they take 3 years of average performance from young companies that make at least $2 million a year in revenue, and they rank them into the top 5,000 fastest growing companies. And some of those companies are growing in the tens or hundreds of thousands of percent. I mean, it's amazing the percentages that young businesses can grow. So I'm comparing something similar to that list to some of these cryptocurrency technologies that we're seeing.
Wow. Yeah. And I think there was a joke about the guy who invested in Bitcoin at the very beginning, and then he used some of it to buy a pizza. Do you know that story?
I do.
Why don't you share it? It is, because the stories are great, but it will really prove a point here.
So one of the things about cryptocurrencies is that a very small amount of money can turn into a very large amount of money. And there's all kinds of true stories that are becoming lore in this whole time that we're in. And one of the stories is that when Bitcoin was only a few pennies or a few dollars, it started out to be a few pennies. People don't even realize how inexpensive it started out to be. And now it's about $65,000 a coin. It started out literally below a penny. So what happened was, early on, a young adopter of Bitcoin was excited about a new currency that could be used to buy things. And that was initially what Bitcoin was talked about, is how to get out of a traditional government currency that was centrally controlled and be in a decentralized currency. And so he bought a pizza to demonstrate the use of Bitcoin. And today, if he had kept those Bitcoin, they would be worth over $82 million.
And so, okay, so I do want to, I know we want to talk about lots of other things too, but, I see lots of people teaching how to trade stocks, how to trade currencies. I have a friend who is in, I think it's Academy or something, where I actually watched a little tutorial on it. And they're talking about, trading these things. And then on the other hand, because I'm a follower of your program, you're teaching us really to buy and hold and not do the trading. Can you talk about the difference? Because I think our listeners would be very interested to know about this, because they hear about friends, even young kids nowadays, they seem to be investing. It's probably the whole Robin Hood thing, but these young people, they're investing in cryptos, but it sounds like a lot of people are trading versus buying and holding and trying to accumulate.
Yes. So let me just talk a little bit about traditional asset allocation before I address that, so I can kind of frame this right. What I believe is that if you take about 5% of your traditional investing portfolio, that's all you need to do, because cryptocurrencies are volatile, it is risky, and it's something that's new, and people need to sort of ease into it. So getting about 5% of your traditional portfolio, your retirement portfolio, in cryptocurrency, I think is all you need to do. You don't need to jump in or invest the whole thing or anything like that. So my philosophy is a traditional financial asset allocation model, like large company stocks, mid caps, medium company stocks, small caps or small companies, international, some real estate, some emerging markets, et cetera.
And you believe in having some bonds as well?
I believe that bonds are paying near 0%. And so you can substitute other things for bonds right now. You can substitute dividend paying stocks. You could substitute dividend paying cryptocurrencies. We do have some cryptocurrencies that are earning 4% or more per year. One of my favorites is paying 4% right now. And so you can substitute other things. You don't have to have bonds. So you can take just 5% of your portfolio, put it into cryptocurrencies. But what that will do for you is give you faster growth than some of the rest of your portfolio. And let me give you an example. It doesn't take a lot of money to make a lot of money in cryptocurrency because of the rates that they're compounding at. So there are true stories like $1,000 became $300,000. We were just reviewing one cryptocurrency where people have literally become billionaires. Of course, that's happened in Bitcoin too, where people have become billionaires by investing in crypto. So the compounding rates are so high that it is unlike anything we've ever seen in our lifetime. And the key is you want to be in the things that are going to have the most success, have the most adoption, have a large community supporting it, You want to have a real technology that they are working on, or that they're a problem they're solving. You want to have a super management team. A lot of the things that you use to evaluate a cryptocurrency are the same things that you would use to evaluate a good stock company that you would invest in for a stock. Yeah.
Wow. Well, what about people that are close to retirement? Because a lot of our listeners, we've done some polls and also people in our community itself, they're nearing retirement and they're worried about what happens if there is a correction. Should they just use something like, short-term bonds just to keep some money safe, or should they use cash? To just be prepared in case something like that does happen and it does give them some money to maybe buy low?
Well, if you're close to retirement, of course, you don't want to take risk on much of your capital. So that's why a small investment in cryptocurrency is ideal for someone like that. It doesn't take a lot of money for it to grow to a lot. But yes, you want to, stay invested for the long term. If you're getting close to retirement, though, that's when you're going to be taking less risk, probably have less of your money invested. But what I think is happening with this revolution that is going on is that it's so early. So this is where I really differ with some of the people out there who are saying, oh, this is a bubble, or this can't go on, or whatever. No, this is something that they're not understanding, that it's a technological revolution, that it is going from centralized to decentralized. This new payment system is going to come to be, and you're going to be able to pay with all these different currencies. So Amazon might adopt, Dogecoin, or they might adopt Bitcoin, or they might adopt something else. You're going to have the option to pay with different things. So that's why right now, I think it's very early. There's less than 15% of people who are investing in cryptocurrency right now. So it can't possibly be a bubble, because a bubble is when everybody's investing in it, when everybody loves it, when everybody thinks it's going to go on forever. That's a bubble. Right now, people hate cryptocurrency. They're negative on it. They are saying it's a bubble every single day. And that's why I think, we're starting to see the institutions come in now. We're starting to see high net worth individuals, hedge funds come in right now. They are chomping at the bit to invest in this because they're seeing the compounding rate. So I think we're extremely early. And that's why I don't think anyone should be trading their cryptocurrency. I'm recommending that people buy and hold their cryptocurrency as long as it's continuing to be a successful project, as long as nothing has changed that's going to take away from the success that they're having. But if this is going to be a successful coin in the future, and I've identified 8 that I really believe in, that I'm recommending people own, those I think are going to be the ones that you just want to buy and hold and put them away. Because right now, a lot of those are like 30 cents, 3 cents, $1. I mean, they're so low right now in what they're selling for. I think there's a chance that they could be much higher in the future. And so it would be a real shame. There might be more $82 million pizzas out there for people who sell too soon.
So, okay. And before we finish, I do want to talk about your book too. But I want to talk about this thing of having a wealth mindset, because you talk about be wealthy and smart. That's your podcast. So anyway, let's talk about the wealth mindset and what does it really mean?
So I think step 1 of the 6 steps to wealth that I identified, which is what helped me get to $2 million at age 39, is step 1 was creating a wealthy mindset. So creating a wealthy mindset means that you have to give yourself confidence that you can do this. You have to give yourself some financial goals of what you're shooting for. You have to basically change some negative beliefs or experiences that you may have had in your life. For example, our parents always have good intentions, but sometimes they're teaching us about money, and we might learn that we can't have money. We hear things like money doesn't grow on trees. What do you think? We're rich? We're not. I'm not made of money. There's all those expressions that parents might say to try to sort of teach us the value of money, but it can come into us negatively and give us negative beliefs about money. So some of what we need to do is change our mindset, and we can do that through simple repetition with affirmations of positive things that we want to believe in our mindset about money.
Well, and there's some people that, well, when our parents, a lot of them were raised during the Depression, and they experience that. And, I teach people about the 5 money personalities, and, there's something to be said for people that have a scarcity, or, they're really, really worried about security. So what advice do you have for them? Because, they have a lot of fear around money and being invested. And, they may look back to 2000, 2008 and be worried, that they don't want to be invested or not have enough in the market or keep too much in cash.
So, and that's particularly true with my work with women. I was shocked to find out that often women don't feel worthy and deserving of wealth. 61% of women are more comfortable talking about their own death than they are about money. And there is a lot of fear. There are phobics, people who fear money, or people who are just in fear in general, or they don't trust themselves with money, or as soon as they have money, they want to get rid of it subconsciously. And for that, I think what they need to do is really build their gratitude skills, because it's been proven that fear and gratitude cannot exist at the same time in your mind. So if you have a fearful mind and you turn it to a grateful mind, that eliminates the fear. So if you can look at and write down 100 things that you're grateful for, it doesn't matter if it's your dog's eyelashes, it can be anything that you're grateful for. About, around the 30th one, usually people say, oh, I get it. I need to be grateful for everything I have. Mm-hmm. And that really gets them out of the fear and gets them into a different mindset.
I remember working with my first coach, and my homework was I had to write 10 things I was grateful for, or 10 things that were perfect in my life. And, of course you go to the negative. No, nothing's perfect. Right. And my kids were in hunter jumper. They were riding horses. I had my cute little dog in the car, and I was watching this, and I started listing, and I just got into, and I realized everything in my life is perfect. And so, no matter what it is, it's what it is, because it's perfect for where I am right now. I got that. And that was the whole point of it. And I think that's also what you're saying. They always say that gratitude raises our vibration.
Yes, absolutely.
Yeah. And I've witnessed that. So besides the cryptocurrencies, what are some other things that are good to be investing in right now? So, again, with the market up, and there just seems to be so much cash sloshing around out there, and the market just keeps going up. Like, are there areas that you think are also going to be great for this next year or coming years?
Yeah, well, besides cryptocurrency, which I do think provide the highest compounding rate of any choice of any investment we have to invest in currently. So I want to be really clear about that. And anyone, I think, would be wise to put 5% into cryptocurrencies. The second thing, I think, would be to invest in silver, because silver is something that is actually cheaper today than it was 40 years ago. And there's not many things we can say about that. So it's very rare. It's much rarer than gold. It's used for all the electronics that we're going to need today and in the future. So solar panels, computers, cell phones, electric vehicles, all of these things require silver. So silver is going to be much higher in my estimate in the future than it is today. And then also the electric vehicles, the lithium batteries, lithium itself, some things like that are, I think, going to be fast growers for a long time. And that's why they're some of my favorite exchange traded funds or groups of stocks that I recommend for people to invest in.
Okay, so let's just talk about silver for a second, because I've bought silver, and you get this sheet with these coins. But, compared to gold, you end up with like sheets and sheets and sheets of these, like holding physical silver. And is it the same, just like the old nickels and stuff that were silver? You could just get a big bag of them. I mean, how do you suggest that people hold these, and then they're going to have to keep them safe? Do they need to buy a safe to keep them in?
So you're right. The old coins used to be pure silver, and those are the ones that don't have the copper around the edge. So the old quarters that just had silver all the way through. people have put those in bags and they call that junk silver. So the quarters and dimes, et cetera, they put those in bags, and you can buy junk silver at the coin dealer. You can also buy American Eagles or Canadian Maple Leafs or whatever is specific to your country that you live in. And those you have to pay a little bit of a premium for that. You're buying them from the mint, and it costs a little bit of extra for them to make a profit, plus shipping and handling, et cetera. So then when you get them, which I do recommend that people keep them in their own possession. I don't recommend that you put them in a safety deposit box. I do recommend you keep them at home. And yes, if you can have a safe that's bolted to the floor, that's really the best situation to have, is to store them in a very safe, secure place.
Wow. So it just seems like there's so much of it. But I know you do recommend some stocks too, like silver mining stocks. Is that another way to do it, or is that not as good as the physical?
It's different than the physical because you're investing in the business. So you're investing in the business and the mines. And as the price of silver goes up, those mines are going to find silver, and it's all going to be additional profit as the price goes up in silver, right? So every amount of silver, every ounce of silver that they have in the mine is going to be more valuable. So it's going to magnify the results when the price of silver goes up. So that's why we invest in the mines as well as silver. But we want physical silver because, in times like this, when 40% of the money that's in existence today in the US was printed in the last year. These are different times than what we've experienced in the past. And we're already starting to see inflation be much higher than we've seen in years. And it's much higher than what is being reported to us. They're saying it's around a 6% inflation when there's actual evidence it's more in the double digits and much higher than that. And for some things, really high. It depends what it is. So I think that when you have an excess of paper money being printed, that's where money that is in limited supply, or a metal that's in limited supply that is money, is going to be worth more. And that's why we want to have some in our possession as well.
Let's talk about paying off the mortgage because, a lot of people have that idea. And with interest rates as low as they are, what is your suggestion now for people, especially if they're getting back, near retirement and they still have a balance? And should they pay that off so they don't have that expense, or do you have another recommendation?
So I'm actually not a fan of paying off your mortgage. The cost of money is so low today. It's the lowest we've seen in our lifetimes, right? So the cost of a mortgage is 3% or below. It's tax deductible in most cases for people. So it's even less than that. And you're saving money on your taxes too. And the problem with paying off your mortgage early is exactly what you described. They're taking their retirement funds and they're paying off their house. And that means they're no longer able to invest in retirement. So that money that was going to grow for retirement is now stuck in your house and is going to grow at whatever percent your home is going to grow if it continues to grow. But of course, we are at all-time high prices on housing as well. So it's not likely that that's going to continue for, another 10 years at this rate. And houses are highly, it's not only interest rates that are keeping valuations high, but also supply and demand. And we have high demand since COVID. And then also we have a false sense of supply because a lot of homes were taken off the market because of the forbearance help that people got. So we didn't get the foreclosures that we normally do. So we don't have the normal supply. We have a lower supply, higher demand, and low interest rates, which is putting us in a big housing, probably close to a housing bubble pretty soon.
So you think there may be a bit of a correction there?
I think that next year we'll see some softening in the housing market. Yes.
Because there's a lot of people waiting, and
I think
hoping that they can get a house because even if they have the money, I'm talking to so many people, they just can't buy a house.
Yeah. So I said in the fourth quarter of this year, we'd start to see some softening of the market, not a lot, but just a little bit. We are seeing that home sales were down last quarter. And we're seeing more foreclosures come on the market and just houses come out of forbearance. We're just starting to see that. But the real problem with paying off your mortgage is that if you keep your retirement funds in stocks, stocks will compound pretty easily year in, year out at about a 10% average rate of return. And when you put your money into a house, you're not getting that money compounding for you. So that's called opportunity cost. So the opportunity cost is what's high by moving money out of your retirement to pay off your home. Had she left her money in her retirement account in stocks and could compound at 10% per year, she'd be way farther ahead at how much she would have in her retirement account, even with her house still having a mortgage. Now, having said that, there is a strategy that you can use that will help pay your house off 7 years faster. And that is to pay an extra 1/12 per month on your mortgage. So let's say your mortgage is $1,200 a month, just for an easy math number. And you take 1/12 of that, which is $100. So instead of $1,200, you pay $1,300. At the end of a year, you've paid one extra payment, one extra $1,200 payment, right? So that is going to go completely toward interest and pay off your balance faster.
You mean towards the principal?
I'm sorry, towards your principal, and pay off your balance faster. And so it'll reduce it by about 7 years to do that. So you can still keep your money invested, get the 10% compounding rate in stocks, and pay off your mortgage sooner. But again, the problem I have is that people take their money out of retirement, then they give up the compounding they could have made in retirement, which would have ended up being worth much more than having paid off their mortgage early.
Again, it's this emotion tied to money.
It's the fear. It's fear and the security.
Yeah. And sometimes it may even make sense to, if you have a small balance, just refinance it. So the payment is so low that it's you don't even notice it anymore, and you don't have to touch your cash.
Yeah, I mean, this is a great time to refinance. I mentioned that on the podcast, that this was a spectacular time to refinance. Yet, what are we hearing? We're hearing that most people are not refinancing. And so they're paying higher interest rates. Mm-hmm. They're thinking that either they don't qualify or it's going to take a lot of time. It's easier than ever to refinance because now you can apply online. It automatically applies to like 7 different banks for you and gets you offers for your refinance. So it's easier than ever to refinance. It does take time to get all your paperwork together, but still, there are things where, you can even qualify based on your income and you don't even have to have your taxes done. So all kinds of things that people can do to refinance if they look into it.
And what you're talking about there is called fintech. So electronic mortgages, applying online, signing your paperwork online, it's like everything. The technology is changing so quickly. So, I want to make sure that we talk about this. You were going to share with us some of the mistakes that we make. So besides trying to pay the mortgage off or, not being in the market, being scared, is there anything else you want to share that we should avoid? What type of mistakes?
Well, I think that people need to look at dips in the market as buying opportunities. And I think, again, the fear, people get caught up in the dip. And they get fearful and think, oh, should I sell? Should I try and protect my money? But we all went through that huge 30% dip when COVID started. And we saw how the market rebounded and how it came back. And it wasn't fun for anyone to go through it. But the prudent thing to do actually was to hold through it. And it did come back and then some. And so if you can use dips to your advantage and use those as a buying opportunity for good quality growth type opportunities, I think you're going to be much further ahead.
So is that a good reason to keep some cash on the side, like a good chunk of cash? Because, I always say 3 to 6 months, even a year of expenses in cash, just for emergencies and God knows. But if the market does take a dip, you can go in and buy. You can, although keeping your money in cash does have an opportunity cost as well, because if it were invested, you could be, making money on that. So I think you have to be careful not to have too much, because what we're seeing is that people have too much cash. Mhm.
They're 50% in cash, or, the amount of cash people have is typically too high, not too low. And so people need to get more money invested rather than have less money invested. So.
Okay, great. So I would love for you right now just to talk about your book. You have this wonderful book that's out, but now, you're bringing out a book at perfect timing on cryptocurrencies. What is the title? How can people buy it? And what are they going to learn?
Well, it's called 3 Steps to Quantum Wealth, the Wealth Heiress's Guide to Financial Freedom by Investing in Cryptocurrencies. And it's really about how to shave decades off of the investing time to accumulate money for retirement, or how a little bit of money can grow into crazy wealth. Some of the stories like we've been talking about, which seems very hard to believe, but they're true. And the amount of wealth that is being created right now in crypto is, again, unlike anything I've ever seen before. I mean, it's very, very exciting. And you don't have to invest a lot of money. Just a little bit of money can be life-changing. So that's what I wanted to write about. I wanted to frame it around the 6 steps to wealth. I wanted to frame it around venture capital and how companies grow fast when they're young. I wanted to explain the technological revolution that we are experiencing and why it's here and why it's going to continue, why it's not in a bubble, how to identify a bubble when we do get to a bubble. There's 12 different things to identify that are all happening when you are in a bubble, and I've been in many of them, so I've lived them and can explain exactly how they happen. And so I wanted to really put it within a bigger context of how to have financial freedom and how to use cryptocurrencies as part of your portfolio to build that financial freedom. And it's going to hopefully be out sometime around the end of November. I don't have an exact date. So look for it soon. It'll be available on Amazon, and yeah, it'll be really exciting.
Okay. And you also have your podcast, which it's interesting. Sometimes you just come in and talk for 10, 15 minutes just with the tip, but it's Be Wealthy and Smart. Are you on all the different podcast venues, or is there a key one?
Yes, I'm on Apple Podcasts, and wherever you find podcasts, you can find me, or you can find it at my website at lindapjones.com/podcasts. And all 950 of my podcasts are there. It's a wealth mentoring library for free for anyone to come in. You can put words in the search box that you want to know more about and find any topic, from mindset to paying off debt to improving your credit to investing, asset allocation, crypto, any topic like that. And I've got a listening a list of podcasts that you can listen to. That's a playlist if people want to get up to speed quickly on what cryptocurrencies are and some of my recommendations for cryptocurrencies. They can actually find that on my blog on my website at lindapjones.com.
I was driving to Chicago and I did that.
Oh, good. What did you think?
My phone plugged, pardon?
What did you think?
Oh, it was fantastic. Yeah, it was fun. I thought, oh gosh, I have to keep going down though, and making sure that, when you're driving, it's kind of hard to be dealing with that, but it was great. I really did learn a lot. And talk about too, if they come to your website and get on your mailing list, they'll be invited periodically to join. You've got an investing program too?
I do. It's called the VIP experience, the Be Wealthy and Smart VIP experience. And people pay once to join, and then they have a lifetime membership, and they get a whole asset allocation model of stock, exchange traded funds that I recommend. Like I said, the large cap, mid cap, small cap, international, real estate, emerging markets, and then some specialty ETFs that are growing fast. And then my 8 cryptos that I recommend that people have that I think have extraordinary opportunity for wealth building.
Yeah, and it's just great to be able to be with people that you can ask questions of and keep a level head when you start getting nervous. So
yeah, we do a monthly webinar with everybody, and at the end I take live questions, and then weekly people get an update on by email and get everything, what's going on in the market, what's happening with crypto, anything that's going on. You're in a very short amount of time, you're kept up to speed on your investments. That's part of what I do with my podcast, and why they're so short is I really respect people's time and the fact that I want to deliver value in the shortest amount of time, so that you don't have to take a lot of time to manage your investments or to know where to invest or to understand what's going on with them, or even what's coming down the road. Because oftentimes I'll be able to say, this is going to happen, or that's going to happen, or I can see, we're going down this road, or different things before corrections come, for example, or after corrections, what to do. So lots of tips and, hands-on hand-holding for people that are investing their own money.
That's fantastic. I'm so glad that you've decided to do this. It's so much needed, especially for the women that are out there, because that's who I'm supporting in the Smart Women's Empowerment. So I'm so thrilled that you decided to come share your wisdom with us, especially to help you with your book launch. So exciting. I love doing it. I did help Marcy Scheimoff. We had her on for all 3 book launches over the last 10 years. So it's fun to be part of a book launch. So congratulations.
Thank you so much.
Yeah. So it's lindapjones.com.
Mm-hmm.
Wonderful. Okay. Thanks for being here. We really enjoyed this. Oh, did you have one last tip you wanted to share?
Oh, well, let's see. I think another thing that people could do is make sure that they're keeping a long-term time horizon, keep a long-term perspective. Sometimes people do get caught up in this short-term trading, short-term, what's the market doing? The news tends to focus on the short term. They're talking about, is China going to default, or they're not going to default, or whatever the next thing is. And then they do that to get viewership. Yeah. And to get you to tune in. And so I think what we need to do is take a long-term perspective and not get caught up in the short-term news or the short-term trading. I think staying long-term, buy and hold, is going to win out every time.
Oh, wonderful. Thank you so much. So everyone, I want to thank you all for being here and joining us. I mentioned Marcy, next in December, we have Dr. Mincola and Marcy Scheimoff coming in on their own shows, and it's all about miracles. So we're so happy to have you here. Visit joinsmartwomen.com, and you'll be taken to our site where you can put in your name and email, and you'll get our mailing, so you'll know who the guests are, and you'll be able to access our free online community and the Smart Women's Academy. So until next time, go out and live with more purpose, passion, and prosperity.
Thank you for joining us here at Smart Women Talk Radio, a place to learn, prosper, and grow. Tune in again next week for another exciting episode of Smart Women on the CTR Network. And remember to live with purpose, passion, and prosperity.